Hey guys, wonderful day again today, and I want to follow up on a video which I just shot a couple of minutes back on the rise of IPOs in India. And I want to have a separate, question and answer series, kind of a video series that helps me walk through some of the questions I keep getting, or rather, I could keep getting on my YouTube channel. So, this question is by Kahan Shah, who's asked me about 3 weeks back, and I'm sorry if I'm answering this question much later than intended, which is just a quick question. Like, it might sound off topic, but why should someone invest in AMC slash stockbrokers? Like, what drives them up, how to see potential in them? It may sound vague and incomplete, but I've always been confused why AMCs would have their IPOs because they're having good margin business and sound almost illogical to raise money. Which is a very interesting question. It sort of provoked some of the thinking behind why IPOs would themselves go public. So I had a couple of reasons listed. So let me walk you through the Indian retail investors' growth story for now. So whenever an AMC is trying to release a con call report, what they're essentially trying to signal to the retail investor is that here we are answering the tough questions for you. Here we are intending to be taken more seriously. Here we are trying to understand what you as an investor need from us, from the products that we are trying to sell, you know. So with an AMC, there are three metrics in my judgment, right? The first metric is assets under management. The second is their SIP book. If their SIP book is increasing, then it's a good metric. Similarly, for the first one, if their assets under the management is increasing, it's a good metric to be looked into. And the third thing is where their demographic is largely located, right? Some companies are very, very focused towards a certain demographic. They know that, for example, let's give a small example. Shriram Finance is a very strong company with good fundamentals that lends mostly in vehicle financing. They're mostly into vehicle financing, and they extend a lot of it's a very high margin business, because of which, if you notice someone investing in the FD markets, in fixed deposits, they would notice that Shriram Finance has historically been one of the highest interest providing FD rates. So they're aware that their core demographic is vehicle financing, and hence they're able to extend this kind of fixed deposit rates for the consumer. So this is one of the specific example that I'm giving in terms of an AMC company trying to expand its business, right? So with regards to the Indian growth story, if you notice in the last 5 to 10 years, especially more so after COVID, I think there has been the rising retail participation. There has been more kinds of financial inclusion and intermediation, inclusion towards especially women, and then financial intermediation across tier 2 and tier 3 cities. And then there's a growing investor confidence that, okay, fine, here is my money. I can invest this money in equity markets right now. And since I can invest in equity markets right now, I can, with reasonable confidence, be able to say that the markets will reward me in some way. This is very huge. Why do I mention this is very huge? Because historically, in the last 10 to 20 years, beyond 10 to 20 years, if you notice, Indian investments were largely in two areas: real estate and gold. For them to expand beyond real estate and gold and say, hey, listen, we would like to now invest and expand our assets into equity markets, it's very, very huge. And for an AMC company to cash in, to bank in that kind of an investor confidence, is by going public. They're trying to cash in that. They know that there's a growing demographic across the top 30 cities in India. And there's a separate metric called the B30 cities in India, where they've recognized that they want to expand beyond the top 30 cities in India, expand to tier 2 and tier 3 cities, increase the number of products they have in their lineup, right? For example, Canara Robeco had about 26 mutual funds in their scheme, right? In their mutual fund asset management company, they have about 26 schemes, and they are mostly actively managed. They want to expand to passively managed, increase the number of assets, use that assets for operations, use that assets for increasing the number of physical branches across India, increase the amount of footprint in the company, thereby increasing the talent and manpower, and in that way they would be able to increase the number of products that they have in their lineup, as I just mentioned, with the risk of repeating myself. Another thing would be, just let me walk you through the microeconomics behind it. There's a growing consumer demand. There is a growing motivation to expand to more firms. What do I mean by expanding to more firms? Expanding to global entities. If Canada Robeco is expanding, is going public, their foreign entity, which is Oryx Investments, which is a Japanese company, they will be having more incentive to like bring more Japanese investors into the company, because their entity, which is Canada Robeco, has gone public. So you can see there's a there's a snowballing effect to all of this, because just one company is going public. And if you look into the macroeconomics behind it, indirectly this is good for the entire industry, because more and more consumer demand means more and more choices for a consumer to expand on what kind of products they can invest in. For example, I could invest in Shriram Finance FD, but I could also invest in SBI mutual fund, because they're one of the best mutual funds, right? I could invest in a passive scheme given by Zerodha AMC. We have a huge wide range of products that a consumer can invest in, and that's behind why an IPO should be encouraged for an AMC related company. Until next time.